at 50, because the 20 rupee doesn't change our market cap by much. But GVK Power, Soros will be happy to see this. The stock's been hammered out of shape over the last couple of days, but it's back up about 6%. But United Spirits, the stock that we were just discussing, is putting on some more weight, 7.25. The only stock that I can see on the green in the top 50 traded on the non-index side is Ispat. That stock is down about 2.1%. GMR is up about 4% as well, and the fertilizer counters are managing to hold their own. Suzlon is taking it away with a 5% move. The infrastructure stocks are all doing well. GMR, JP Associates, Reliance Infra, the three most actively traded infrastructure stocks, are all having a respectable session. 226 then higher on the Sensex, and Nifty higher by about 70. Bala, how would you play these the infrastructure sector in the backdrop of these three stocks that I just listed? Because they all have respectable order books over a certain amount of period of time, but execution and interest cost has been dogging them for quite some time right now. At these valuations, would you advise an entry to people?
No, I would still wait them out. I would wait for some more bad news to come. Put some reasonable price. See, I think in this market, it's not a question of buying it today or buying it tomorrow. I think you have to put a price target saying at this is a reasonable price for this stock. I'm willing to buy it. Okay, in terms of time horizon, God knows. 1 year, 2 years, 3 years. If you are willing to wait out, because the whole thing is when the revival starts and the economy starts doing better, infrastructure and banking are going to lead the rally. Because that is where the action is going to be. So I think as a sector, yes, you should keep a very close watch on that. If you're happy with the prices, please go ahead and buy them.
Speaking of banking, that was the one space that actually showed a good amount of resilience, and even in the quarter gone by, the spreads were largely intact, and we saw some pretty healthy numbers from the PSU space, even from the private banking space. What would you go out and pick now? Because now rates are moving down, so if at all, it should sort of go out and help banks from this point onwards.
I would look at two things in the banking space. Yes, the interest spreads are fine now. As interest rates keep coming down, the spreads will start to diminish. One. Two is nobody is talking about NPAs yet.
That's true.
Because till the last year, I think the banks had a clean balance sheet. They had written off their sins from 2004 onwards, and we hadn't seen credit expansion. The last 3 quarters is what has seen the huge credit expansion. Personal loans are already creating a problem with, I think I heard of credit card defaults going up to 25% of the portfolio. So the personal loan, home loans cannot be too much different for the industry as a whole. So those things are still to hit. When that comes, probably you will get a better buying opportunity.
Okay.
Meanwhile, TDML is up 12% at 2010. The intraday high it's hit is 2130. This is the point I was making. The 20 calls over the last 2 days have been so active that even in a best case scenario, if you had to take a 24-25 rupee punt on the stock, it would find it extremely difficult. You're seeing anywhere between 40 to about 100% build up at that 20 call on TTML. So I think 12-13% is what the market is ready to give it. 20-21 rupees at best is what this transaction is worth in terms of price of the market. 60 higher on the Sensex and Nifty by about 170 or thereabouts. Anupam, the call on the telecom sector as a whole, not so much the stocks, but just the operational environment that they're in, because you keep talking about how the manufacturing side is facing input cost pressures, etc. These companies have also, all said and done, spoken about very big capex plans. TTML itself is TTSL is talking about a $2 billion capex plan, which includes rollouts on the GSM side as well as expanding their own CDMA network. So with the kind of RCOM, the flag, and Bharti and its $2 billion, etc., TTML, what is the environment like at this point?
See, I think, if you start from what you said about the capex thing, I think for this entire market, if you're looking at any stock to invest in, any sector to look at, there are a few things that any stock or any company should not have. I think some of them are debt. Anything that has to do with debt, do not touch. Anything that has to do with revenues from US or the Western world, do not touch. I think, because as the world goes into a recession, it's not going to leave India aside. Now, if you focus on the telecom sector in India, you just need to see what's the kind of debt that they have on their books. And one very simple thing, how are they going to fund their capex? It's as simple as that. This is a sector which is still on its growth path. The total subscribers in India are at about 300 million plus. People are comfortable with the 500 million subscriber number by, say, the end of calendar 2010. So I think you can take some amount of confidence in your 8 million subs a month kind of a number for the addition. So or whatever has not touched the domestic consumption story for telecoms. So let's just assume for a minute that for the next a year or two the growth is intact. How do you fund that growth, and how is your margin picture looking? These are two totally different things. Debt you will need for capex, but if you've turned net cash flow positive, as we've seen in the case of Bharti, that's a good thing. You would want to depend on your internal generations for funding your capex. In a falling interest rate environment, taking debt is okay, but that's, you also become vulnerable to a certain extent. Coming to margins, this is a sector which probably in the next 2 quarters will see a lot of new entrants coming up, launching their operations at a rock bottom cost. There might be a price for, and that is a worst case scenario, which means ARPUs could probably take a plunge further from here, right? That could just completely take your margins apart. Now you need to take a call whether that is a 1 to 2 quarter story, or at some point of time when everybody starts shooting themselves on the foot, you all die, but only the strongest survive. And in that case, who do you want to bet with? I'm sorry, but the answer again comes back to the leading players who have a larger market share. They also have deep pockets. They'll probably be able to withstand this battle. But what toll that will take on the stock price, it's a totally different thing.
I'm still upset about the call dropping that happens in Bombay as a consumer.
I think you'll soon see that vanishing as people talk less and less. You'll get better value.
I don't know if that'll happen, but just coming back to your point about Unitech, Fitch downgraded it on Wednesday. We actually spoke to Fitch about it, and the reason I bring it up again is just because of the point that Anupam mentions about debt. Now they've got the highest debt to equity ratio in the real estate industry, and according to Fitch's report, the net debt to cash position is about 3.5 times. If they do not get this money from Telenor in time, or if they do not use some of this money, I refuse to believe that they will not use some of this money to retire the debt on the listed Unitech. But if they don't do that in a specific amount of time, and that specific amount of time can either be assumed by you, me, or the marketplace, or the management at this point of time, it's assumed by the marketplace. I think the market will give it X amount of time. And see, cost of funds are not going to come down in a hurry for someone like a Unitech. You saw the negative news that surrounded ICICI Bank with respect to it probably going bust or whatever it was, and the kind of nonsense euphoria that was surrounded about it from the negative perspective. You've already had that one piece of news that's floated around with Unitech with respect to a default payment. You can issue any number of clarifications, but these things remain at the back of the market's mind. And to see one of the largest rating agencies in the world come and downgrade it, it doesn't spell too well for the sector as well. Do remember that these are two of the largest real estate companies in India have also gone ahead, as Bala said, it's not, and Anupam was reiterating, that this is not an environment where you go ahead and raise funds from. So you've already seen these two companies not go ahead with their Singapore plans as well. So I think the concerns on real estate are still very, very active. And then going back to the Pranay Vakil's point time and time again, that real estate asset prices have still not corrected.